Hey, what's going on guys? I'm back with another high probability trading strategy. This time demonstrating how to combine the volume profile with the M.P.E trading strategy taught on this channel. Many of you enjoyed the previous video on how to use volume profile to determine the strongest key levels. So I thought I will dive deeper into this and show you a step-by-step way to incorporate this into the M.P.E trading strategy. Now, if you are new to this channel, we have a free day trading PDF which you can download via the link in the description down below. In the guide, we explain in detail what the M.P.E trading strategy stands for, but I will also break it down for you in this video and show you how to incorporate the volume profile into the trading strategy. If you have not watched the previous video about volume profile and are not familiar with what a volume profile is, it is basically a tool that shows you where the strongest levels are. A volume profile provides you with two key information: the point of control and the point of extreme. It is otherwise known as the POC or POE in short. The point of control is the strongest level where there is the highest amount of trading volume. It should be viewed as a strong support or resistance level because volume equates to interest. And if a large number of traders view that level as important, then it is wise that we pay attention to that level as well. The fixed range volume profile automatically plots out this level for you. The point of extreme, on the other hand, is the level which price spends very little time at. It should be viewed as a take profit level and where you look to exit. Anyhow, for this strategy, we will be focusing on the point of control, basically the longest bar in a volume profile. We don't need the point of extreme for this strategy, so I won't touch on that. And that's a quick summary of how to use the volume profile. Now, I will leave a link to that video at the top right corner and at the end screen of this video. And I recommend checking that video out next if you have not. Before I run through how to incorporate this into your trading, please do me a small favor and hit that thumbs up button. It helps support the channel and I will really appreciate that. If you are new to the channel, do hit that subscribe button as well because we create many new videos every single week, sharing with you our latest insights, and I know it's going to help you tremendously. You can also join our free Telegram group where we send out signals daily, and you can find the link to that in the description down below, together with the free day trading guide that we prepared for you. So let's jump into the M.P.E trading strategy. M stands for market condition, P for price level, and E for entry trigger. Now, we will be using the volume profile to help us identify the strongest price level. Basically, the volume profile will assist us with the P of the M.P.E strategy. Now, as a disclaimer, this is not required. You can always use horizontal market structure or support and resistance level to identify your price level. In fact, that's what we teach in the free day trading guide. But for the purpose of this video, because I'm trying to show you how to use the volume profile, then we are going to stick to using the point of control as our key price level. So let's go through the M.P.E trading strategy step by step. Right here, we have a chart, and the first thing we always want to do is ask ourselves what the market condition is. Is it bullish? Is it bearish? Or is price consolidating? A bullish market condition occurs when price makes a series of higher highs and higher lows. If the price makes a series of lower lows and lower highs instead, this indicates a bearish market condition. And of course, if you see that price is trapped between two levels, then it's ranging. Pretty elementary stuff. But this is the first step that you need to do. You never want to trade against the market condition, especially if you are still new to trading or are struggling to turn a profit. Sticking with the market condition is the easiest way to make money. So focus on mastering this first and don't trade contrary to the market condition. So in this case, the price is bullish and we know that we want to buy. Let's move on to the second step, P for price level. We already know that we want to buy, so of course we need to know what's a good price level to buy. We don't just buy at wherever the price is because the market condition is bullish. We need to get in at the right price level so that we can minimize our risk and maximize our reward. To do that, let's pull out the volume profile tool. I'm using tradingview.com, a free web-based charting platform where you can use the fixed range volume profile for free. Platforms like MetaTrader 4 don't have the volume profile indicator pre-installed, so I recommend just using TradingView for this. It is free anyways. Just head over to here and click the fixed range volume profile tool. Now, to find the strongest key level, we need to plot the fixed range volume profile at places where price has consolidated. In this example, it will be over here. The volume profile will automatically plot out the point of control. This is the critical level to which we want to wait for the price to retrace to. And that's it for this step. So moving on, the last step is E for entry. This step involves watching for a price action candlestick confirmation at the key level that we have identified in the previous step. It could be a bullish engulfing pattern, a morning star pattern, or a pin bar. Again, these patterns are covered in our free day trading guide, so definitely check that portion out if you are new to trading and are not familiar with these chart patterns. So right here, price eventually retraces to the key level and we get a nice bullish candlestick pattern here. And that will be our entry trigger. Now, a word of caution, make sure that the market condition is still bullish when price hits the key level. Sometimes, price may have already made a double top or head and shoulders pattern at the top before retracing. Always make sure that the market condition is still intact before taking the trade. If the market condition changes, then you don't want to be trading against the market condition. Let me run you through another example, this time a bearish setup. Right here, this currency pair is bearish because it is trending down. Observe the swing lows and swing highs and you will see that price has been making a series of lower lows and lower highs. Next, we need to find a strong resistance level to sell this currency pair. So pull out the fixed range volume profile here and plot it at the consolidation level right here. The point of control level will be automatically plotted and we will patiently wait for price to retrace to this level. Price eventually retraces to it and gives us a nice bearish candlestick pattern. Upon seeing this candlestick pattern, we can go ahead to take the trade. And this is the complete process of how we incorporate the volume profile with the M.P.E trading strategy. Summing up this video, I explained what the M.P.E trading strategy stands for. M stands for market condition, P for price level, and E for entry trigger. I also showed you how to incorporate the volume profile as part of P in the M.P.E trading strategy. You want to plot the volume profile at the consolidation areas and pay attention to the point of control. The volume profile will plot it out for you automatically and it is the largest bar. Be patient and wait for the price to retrace to the level and watch for a candlestick pattern. Now, as promised, I will leave a link to the video on how to use the volume profile, which goes deeper and provides more examples of how to use this tool. Do check out that video next and don't forget to grab your free day trading guide and join us on Telegram. That's it for this video and thanks for watching.